fees were suddenly, crushing really from something like 400 million to just like, 80, 90 million. I think that was a clear sign that maybe Ethereum is overvalued.
Let's say, for example, that Bitcoin completely crashed and Ethereum completely crashed and went away. There would still be a use case for Tether or USDC or any of the stable coins, right?
Most of the stablecoins were issued on Ethereum, but over time this has been replaced by Tron. And I think that's also an opportunity, right? So maybe the right way to trade this. So we know the US dollar itself has lost in value, and that's really preventing us actually from crashing.
Hi, my name is Lawrence Linker. I'm an executive entrepreneur and investor in crypto. When I first joined the industry a little over 4 years ago, I had a lot to learn. And I found I learned best by just talking to people active in the industry with specific areas of expertise. The Coinversations podcast is my invitation to you to join me in these conversations so that we can both continue learning. Of course, nothing said by me or any of my guests is financial advice, and you must do your own research before making any investment decisions. Today, I'll be speaking with my good friend and frequent podcast guest, Markus Thielen. For those of you that don't know Markus, Markus is a research analyst and portfolio manager who publishes extensively about market conditions in the crypto space. Markus cut his teeth in TradFi, where he was a macro portfolio manager at JP Morgan for 7 years, later joining the crypto industry as CIO for cryptocurrency at IDEG, and later becoming head of research and strategy at Matrixport. Now Markus runs his own crypto research firm, 10x Research, where he offers top quality research to subscribers across various tiers of membership. Full disclosure, I am a proud 10x Research premium subscriber myself and highly suggested for anyone looking for keen insights in the space. I'll include a link in the show notes. We started our conversation with an overview of where we are in the crypto markets today. We also spent a fair bit of time talking about stablecoins and the role that they're playing in holding up the current market. We also briefly discussed the recent HBO documentary that purports to have identified the real Satoshi Nakamoto. And of course, we had to talk about the upcoming US presidential election. I also wanted to get Markus's opinion on the recent actions of the US Federal Reserve and what we might see from them in the future. And we close things out by discussing what the immediate future might look like for the crypto markets. Are we bullish? Are we bearish? Basically, don't think I got a super straight answer from Markus on that one, but you can watch the conversation, listen to the conversation, and make your own call. I hope you enjoy this discussion as much as I did. All right. Markus, thanks so much for being with us here today.
Thanks for having me. Glad to be here.
So, Markus, why don't we just start out really broad before going into more specifics? So, as somebody who's watching the markets constantly, analyzing the markets constantly, sharing your opinion on a weekly basis, as of recording today, October 11th, 2024, where are we in the crypto markets right now?
Well, historically, we always had these parabolic peaks in each crypto bull market, but then we had these massive crashes. But this time we sort of go sideways for basically like 6 months now. And I think everybody is really confused what this means, right? So we had the halving. I think there was an argument to be made why we would rally from something like 16,000 to 70,000 into the halving. I think people are really confused what's happening now. What we have seen, of course, is around the peak time in March that a lot of old wallets, a lot of whales were actually dumping a lot of Bitcoin. So this was what we have seen in the 2021 peak, in the 27 peak. So obviously the people that were early were really ready to cash out.
The
But instead
2017
of that we seeing
peak,
this crash lower, what we're seeing actually is market is holding up relatively well here. And I think there are two reasons for this. So number one, we have, of course, seen quite a number of stable coins being minted, being issued really this year, and especially since March. I think this is a big surprise for a lot of people that's holding up the market. The ETFs, I think, playing some sort of a role for like a sentiment, but I think it's really these stable coin issuance that is holding up the market, and that's really preventing us actually from crashing.
Okay, can we go into a little more detail on this? Because, definitely stablecoins seems to be a huge part of the narrative right now, increased adoption of stablecoins. I'll give a shout out to Castle Island Ventures, who put out an incredible piece of research on stablecoin adoption internationally recently. But maybe explain to me, how does the issuance of stable coins, which are backed by fiat currency, holding up the crypto market?
So I think, going back a little bit into the history of stablecoins, stablecoins has been around almost since 2014, but they weren't really widely used. I mean, nobody really went into crypto, for the upside return in stablecoins, right? Because again, as you said, they're really stable, right? So you don't really have any advantages really trading stablecoins. But what happened, of course, after the 2017 crash is people kind of like, okay, how can I go from maximum long, 100x long into neutral when the market crashes? And there
Hmm.
was no way really, because if you liquidate your Bitcoin, it usually takes 10 minutes or longer really to get out of the market. But if you want to kind of, find a fast vehicle to be neutral at least, that wasn't really there. And I think in the 2020 crash, in the March COVID crash, that's when really stablecoin issuance exploded. That's when people kind of realized, you know what, we need a different vehicle to go really from maximum long to neutral. And that's really when the adoption really started to increase. And over time, of course, most of the stablecoins were issued on Ethereum, but over time this has been replaced by Tron. And Tron, I think we can argue,
Hmm.
is a bit more China focused. So I think there is probably a large, investor base that is moving, money out of China into stable coins just to be, dollar neutral. And they're happy to be neutral. And I think this year, while the media focuses really on the Bitcoin spot ETF issuance, and we have around, seen around like 18 billion of issuance so far. We don't know how much is really net long. We don't know how much is really, hedged against futures. I mean, in Q1, there was certainly the majority, I would say, at least like 50% was probably hedged with futures. And we know this because some of the large asset managers like Millennium, out of 10 billion inflows that we have seen up until the March peak, 2 billion was for Millennium alone, and they started to sell then over the next quarter, basically some of those levels. But out of the 18 billion so far net inflows, we have seen 38 billion in stablecoin inflows offsetting this. So
Hmm.
this is really a much larger number of inflows we've seen from stablecoins than we have seen on the Bitcoin ETF. So this is really a much bigger driver. And why do people use stablecoins? Yes, to go neutral. I think that was initially, but of course there is a lot more adoption. There's a lot more restrictions on kind of credit card payment and acceptance. If you're coming from kind of questionable countries, we just heard, for example, that overnight in Canada, a bank was fined, $3 billion, or I think they revised it to $1.8 billion, a Canadian bank. So of course, because of money laundering issues and not properly surveillance. So I think every merchant, for example, that accepts payments, for example, from China, runs into this problem. How can I accept a credit card from China? Because some of the payment processing companies automatically block them. I think everybody can, find a way to get around this. And the only way to really get around this is really with stablecoins. So I think we're seeing actually a lot of usage of stablecoins. I think some of the statistics that people are throwing around, it's the question is really, every time is it counted when I sell USD, when I sell BTC for stablecoins and go back into BTC, does that mean there is a real transaction, or is really like a merchant transaction? But I think there is
Hmm.
a larger adoption, and I think we're seeing this now. There's a lot of issuance from various stablecoin issuance, that they want to get into this market because it's still dominantly, the dominant market share is still from Tether these days.
And it's certainly a profitable business if you can aggregate the enough capital, right? Marcus, this feels like a great speaking about stable coins. I do want to dig into this a little deeper, but this feels like a great point to stop and speak quickly about our sponsor. Ready for a real bank alternative using crypto rails? Meet Cast, the ultimate card to spend stablecoins and soon crypto at over 150 million merchants. Available to over 100 countries, it takes just 3 minutes to set up. Top up using USDT, USDC, or USDE from supported networks like Solana, Tron, Ethereum, Polygon, and more. Start spending instantly using Apple or Google Pay. Splitting a bill? Send money through WhatsApp or Telegram. Need to get paid? Get a virtual USD account and receive funds in your Cast account as USD stablecoins. Cast is the first true bank alternative for the globally mobile crypto economy and remote workers. Premium metal cards or Solana cards earn up to 12% in points, and Coinversations listeners get $10 in USDT for your next coffee on Cast. Just download the app using the link in the show notes. Okay, back with Marcus. So, Marcus, I want to dig a little deeper into what we were just talking about, because help me understand. Because on one side, and everyone is saying this, right? Like, oh, like stablecoins is blowing up. That's helping the crypto space. But, you know, the stablecoin ecosystem and the sort of true crypto ecosystem, help me understand better the links, because let's say, for example, that Bitcoin completely crashed and Ethereum completely crashed and went away. There would still be a use case for Tether or USDC or any of the stable coins, right? Those could sort of still operate. And I think you could say vice versa is true. So it sounds like you're saying that the greater adoption of stable coins as a use to be able to move in and out of a neutral position quickly with crypto is it sounds like it would be an indicator of sort of general market health, but why is it a driver of stability to sort of the bottom of the crypto market?
So this is really how the crypto market has changed, and the crypto market is evolving each cycle. So it was really last cycle when stablecoin issuance really exploded because it was associated with simply on-ramp from fiat into crypto and then into various BTC, into ETH, into various other assets. And I think when we look back, it was really, for example, these kind of two, three US banks that were dismantled, last year in March. They were really
Mhm.
responsible for this really on ramp, and it was very easy to transfer a large amount of money to them. You could send USD to them, by 4 p.m. and by 6 p.m. you had your USDC, for example, or USDT, and you could transfer within the crypto ecosystem. But I think this cycle it has actually evolved that the money not necessarily goes into altcoins or into BTC or anything else. It might be actually really used for transactions. And this is how really the ecosystem has changed in the last cycle. The issuance really exploded initially because people wanted in a vehicle to really go from really long to neutral. And then, of course, it was a way to on-ramp directly because the exchanges were focusing actually more on USDT as a trading pair. Binance actually was started with the view that they will never accept USD payments because it would bring along all kinds of troubles, KYC and so on. But if you just have USDT, it might be a little bit easier. And one of the first exchanges was actually Poloniex, that was coincidentally bought by Justin Sun. And this is actually also, since he bought it, and really the issuance on Tron, stablecoin issuance, with Tron, really exploded really in this side. And I think that's really quite an interesting coincidence here. But what I'm saying is last cycle, people used stablecoins as a vehicle to just A, get into neutral, and B, then as an on-ramp vehicle, because suddenly exchanges wanted, accepted USD basically, and then converted those. But this cycle, it seems that a lot of the stablecoin inflows might not go directly into, for crypto speculation, more into transactions.
Yeah, I think I get what you're saying, and we have a bunch of other things to talk about, so I don't want to get stuck on this. But I guess I still feel like I don't have like a super satisfying answer on why I mean, just the simple question is like, how does this help Bitcoin, right? Like, if more people are using more stable coins are being issued, what does that do for the price of Bitcoin? Why would it, how is that an indicator of the health of Bitcoin?
Well, the more stablecoin issuance, some will flow into BTC, some will flow into altcoins, but last cycle it was flowing all into those, versus this cycle, I would say, partially, more will flow into for transactions purposes, right? For settling goods or sending money. We're hearing a lot more about export imports. We're hearing goods being sent from China to Malaysia, and then they're sending stable coins back instead of
Hmm.
like, fiat currencies anymore. So there are kind of like the things that we're hearing more this cycle versus last cycle. Versus last cycle, it all went into crypto. But I think this cycle, the stablecoin issuance is a lot less than we have seen, because also some of the main players have also been a lot quieter, right? We used to have, Binance used to have a, stable coin, a branded stable coin that's no longer there. We used to have, like, Alameda used to be a massive issuer of stable coins. They're no longer there. And USDC also has quite down a bit, right? I mean, they also were much bigger, or were capturing a much higher market share, versus now really USDT, Tether really has taken, I think like almost like 80% of the market share. And of
Hmm.
course, Tether is a little bit, I guess, has at least a reputation of a little bit less compliant than Circle, than USDC. So I think you can say maybe this is really from the periphery, instead of like the institutionalized investors as sending USD into the crypto market. So it might be more from the periphery countries that are seeing this really as a way to on-ramp using crypto rails for payment purposes.
Hmm. And yeah, certainly if I'm, as an individual or institution keeping more cash in the form of stable coins, it definitely is easier to deploy into crypto at the point that I want to take a, sort of a directional view in the markets, right? Okay. Let's change gears for a second. Something that you and I spoke about a little bit, personally, just between us recently, something that has captured a lot of interest in the cryptoverse very, very recently. There was an HBO documentary that came out about somebody naming or basically the creator of the documentary believe that they have figured out who Satoshi is. So maybe we could talk about, if you've seen the documentary, do you find it credible? And then maybe more importantly, I was really concerned when this was coming out, like, wow, if they did it, if they named Satoshi effectively, which I'm not sure they have, could this really have a big effect on the market? Like, are we still you know, under this risk that one day, we'll figure out who Satoshi really is. We'll figure out that maybe the Satoshi wallets may still be accessible. And maybe it's, something that, a situation that we're not as comfortable with as we kind of would want to be. So Marcus, please, your thoughts.
So I think the documentary started a bit slow. I think it apparently it was supposed to be a series, really. It was supposed to be much longer, but in the end, it just really focused on, who is, Satoshi, or who might be, Satoshi. While I think it's a bigger question is really what is Bitcoin, and how has Bitcoin really evolved over time. I think that's a little bit more interesting. I think we also have probably reached a level where the decentralization is so far advanced that, not one person, one nation state might be able to control it anymore, because it's really so decentralized among the players. And I think that is kind of like why maybe it's sort of like irrelevant who
Mm,
invented it or who is behind it, unless it is a nation state, and unless there's some sort of like a backdoor in. But I think the interesting aspect that I really took away from this, and my view about Bitcoin and how Bitcoin has changed over time, I think it was already like set in 2014 that sort of like 80% of the original code had already changed. So Bitcoin is not a computer program that has been written 15 years ago, and it is running by itself. I mean, there are developers. Yes, the developer is proposing things. It needs to be approved by 90 or 95% of the miners, so they need to follow then the next block. And if they agree, basically they will work on the next block, and the longer block is really the one that everybody focuses on. So the interesting aspect here is really that the white paper's uh, title was really a peer-to-peer electronic cash system. And this is opposite of what BlackRock, for example, is promoting
Mm,
right now, that it's digital gold. Because a
mhm,
peer-to-peer cash system needs to have cheap transaction versus what happened actually in, during the block size wars, and especially in 2017, it was actually voted that the block size being kept small. And I think when I look into the history of Bitcoin and Satoshi, what he wanted is again a peer-to-peer electronic cash system. And a cash system needs to have very low transaction fees. So if Peter Todd has been, the founder or the inventor of Bitcoin, he has certainly changed his view along the line because
mm,
he was one of the proponents of keeping the block size small. And therefore, if you keep the block size small, you can actually not expand the system, right? Because you can only fit in a few blocks, a few transactions. I think there are around like 2,000 transactions can be put into one block. And yeah, as we know, each block takes around like 10 minutes. And this is, for example, really minuscule compared to, the transaction that Visa is doing, right? Or what Solana is really promoting and everything. So I think the fact is that Peter Todd was against increasing the block size, which is, I think, fundamentally opposite of what Satoshi was initially proposing through the code, plus also through the title of the white paper. So either Peter Todd has changed his view along the line that Bitcoin was supposed to be kind of like from a profit motive perspective. And there was, of course, in the HBO series, there was I think one interesting conversation quoted where apparently he admitted that he kind of destroyed a lot of Bitcoins or something like this, and maybe the HBO documentary sort of like fitted what was edited a little bit in the sense, but it gave the impression that he kind of got rid of some of those Bitcoins in the past. So if he has been the founder, then he has changed his view along the line.
mm,
Then Bitcoin has actually become something very different than he originally envisioned. But of course, we know that Bitcoin is not a peer-to-peer cash system. It has become a value mechanism and a store value mechanism, and that's why also the price goes up. So we know the US dollar itself has lost in value, and it doesn't really cost much to transfer actually, but it's fundamentally opposite of what gold is. So I think that was kind of like interesting, and I felt like there was a fundamental part that the documentary should have like explained a little bit more. And I think people who understand the history will point to that and think it's kind of like a questionable aspect. But if it's true,
mm.
it's kind of interesting that you have, two Canadian teenagers basically, right? Because Peter Todd was just 22 years old. Vitalik was in his teens. So you had like two Canadian, teenagers, apparently have invented the two largest cryptocurrencies. I think that's an interesting concept. But nevertheless, I don't think I'm not satisfied with was entertaining, but I'm not satisfied with sort of like all the evidence that was presented, and some of the evidence was kind of a little bit. I don't, it wasn't really presented in an absolutely clean way. People could
Mhm.
already pick it apart, and that's I think is a little bit struggling to be really convinced about it.
Yeah, it felt very, very circumstantial. I do, what I appreciate is it did, I think, tug on that part of you that felt like I'll just speak for myself. It tugged on that part of me that felt like this could be possible. Like it could be the guy, right? And I guess those stories are um always going to be interesting. I mean, it's such a fascinating story that we to this day we really don't know who he is. But maybe like they say in the documentary and kind of like what you said, maybe it doesn't matter, right? It's sufficiently decentralized at this point that um it really doesn't matter who started it. And maybe even if the Satoshi wallets become alive at some point and, somebody starts dumping 1 million Bitcoin to the market, even that is something that we could probably survive at this point. So it really might not matter in any way, but it is a fascinating mystery and a good story that I think will intrigue people for a long time to come. Okay. Um, Another narrative that's seems to be something that we are, kind of forever talking about in the last couple of months, relative to, the price of Bitcoin and where things in the crypto markets are going in general, is the US election. It seems to me that there's this sort of broad belief that if Trump gets elected, it's going to be really good for the markets. Certainly, he's been, I think, promoting that view, and that if Kamala gets elected, it's going to be bad for the markets. Your view?
I think it's very difficult, right? Of course, we can start from the view that yes, Trump is, promoting Bitcoin. He has changed his view. He's trying to make, money off Bitcoin. So he's, of course, in favor of it. But will it really ignite the animal spirits? Is it really going to help? For example, with the on-ramp. I mean, we know, for example, for sure that the dismantling of the signature bank, Silicon Valley Bank, and so on, Silvergate, had like a huge impact last year on really the on-ramp. And I think on-ramp has really slowed down. And I think it's very difficult to see how this is going to, reverse. But I think it's also, and we might actually going through this now, and this was kind of like the little fear, that we had, is if Trump seems to be winning or being, ahead of the election, that suddenly the SEC would really ramp up their enforcement actions into the year end before usually the SEC chair tends to step down when there is a new president, from a different party. And I think that's sort of like a little bit the worry that we're seeing like more and more. We heard of course, there was some, I think, some letter to Cumberland being issued, yesterday. One of the market makers, one of the well-known second tier coins market maker was, I think they were on the record that they're really ignoring kind of, TradFi rules and they wouldn't apply to them. But there is a strong case. And I think, when you look at the details, for example, is that the FBI actually has launched a token, has engaged them, so has really, done a lot of effort, like in this last year, really to get the evidence. And I think the worry is, of course, that we're now seeing, all these lawsuits being just thrown around. I mean, the SEC might not, come after everyone because they might not have, the time or the capacity, and it might change after Trump. But nevertheless, it could cause a hiccup. And of course, when Trump talks about, having a Bitcoin as strategic reserve versus the US still have, I think like something like 200,000 Bitcoin or what they have. Um, maybe there's an effort to just kind of like liquidate them before, Trump, wants to keep them as a strategic reserve. So reserve. Maybe there's now some really pressure to sell them. The other aspect is, of course, that Trump would add a lot of debt to the U.S. balance sheet. So this can be seen, of course, for the medium to longer term as negative, but it can also be seen as overstimulating the economy. And if the economy is
Mm,
overstimulated, the Fed maybe, is going to stop maybe hiking interest rates because they say we need to kind of like, kind of be a counterbalance against, the potentially inflation that might come. Of course, last cycle or last time when Trump became president, it was very different, right? We were still coming out of the European debt crisis. There was still this deflationary overhang, but now maybe the world's really changed, right? After COVID, it's really that there's a lot of onshoring, so there is a little bit more sticky inflation. So I think you can make an argument, both sides that, well, maybe Trump as a president is not as strong because otherwise I think crypto would be massively rallying because his
mm.
election odds have really gone up the last kind of, couple of days or
On
last week
Polymarket.
on Polymarket, but I think on others as well, right? But I think, I mean, that's an interesting point because it's becoming like so difficult to read because the other statistics. We don't know what's true. We don't know,
Mm,
of the really biases. So I think in the end, you just have to like decide for yourself, right? We know, of course, that Trump stands for something, and the Democrats stand for anything but Trump, right? But they don't really have like a
mm.
really strong agenda necessarily. We haven't seen much of Kamala Harris really out there, campaigning. I mean, there hasn't really been much. So I think in the end, I would still expect that Trump has, higher election odds. And
Mm,
I think the market tends to price this probably in through, for example, the stock market. So in the stock market, we have, for example, these baskets that are favored if Harris wins or if Trump wins. And those baskets actually indicate that Trump would win because those stocks are outperforming that benefit more if he becomes president. Of course, who knows how everything changes. But I would still think his odds are higher than if Harris wins.
mm.
And that's why I think that crypto is a little bit cautious here, because maybe of some overhang in the market, and it's not so clear picture than we would have like kind of couple of months ago.
Yeah, fair enough. Okay. And yeah, all right. I think what we'll move on from that topic, but somewhere in there we did start talking about a little bit about the Federal Reserve, their management of interest rates. Very recently they cut interest rates for the first time in a very long time. Um, what's your view on what will continue to happen there and how that will affect the crypto markets?
So, I think that, one of the best moments to be really long Bitcoin is after a prolonged hiking cycle or after an aggressive hiking cycle until really the Fed starts cutting. And the Fed stopped hiking last July, and then they said stayed on hold for almost a year. And I think that was really like a really good year for Bitcoin. I think on the margin, you would of course expect also, Fed cutting interest rates, Bitcoin goes up. But in my view, there is just too much focus, right now on crypto Twitter and so on, that it's all about the liquidity cycle. It's all just, looking at interest rate, and then you make a decision. I think there goes a lot more into predicting where, the crypto market goes. I think when you look at on-chain, it doesn't really confirm the bullishness that you would actually have right now because of the interest rate cutting cycle. And, it's really like the incentivization of people, lower interest rates. Am I going to move more money into Bitcoin? Yes or no? But as I was saying already, from the election point of view, maybe interest rates are going to actually stay a little bit higher than expected. So maybe the Fed is going to cut maybe one more time only, and then
Mm,
sort of like pause because, hey, let's see how these policies are going to be implemented, whoever wins. So I think there is just like a lot of uncertainty. But it's when you look at, the last kind of couple of Fed presidents, they were very firm on the deflationary side. They really sent a strong message. Versus, I think Powell has changed his view, quite a lot, and has been like very slow. They're saying we are data dependent, which doesn't really help anybody because, they said they're data dependent, but then they're waiting like too long to hike interest rates, and then they're waiting too long until they cut them. And sort of like now we are in this period where the market even gets worried if the inflation ticks up, 10 basis points in a month-on-month reading, as we have seen, this week. So I think there is all this sort of like uncertainty that we're going. And the Fed is not projecting as in the past they have done because it's a different Fed chair that, we are in a deflationary environment and we need to fight deflation. And of course, this is when deflationary assets like tech stocks and crypto benefit. But right now, we are in an environment where we actually don't know what the Fed is going to do. I mean, they already
mm,
projected a year ago they would be cutting. Then we had in Q1 higher interest, higher inflation. So they became like uncertain. So it took until really, until September before they really finally cut interest rates versus the gap between the Fed funds interest rates and CPI is now more than 200 basis points. So in the end, they could have started cutting. They could have, communicated this much better. And because of this lack of communication, it is this uncertainty for Bitcoin that this might be not as bullish or not as, the only signal to look at.
Hmm. What other signals are you looking at?
So we focus a lot more, on market structure, right? So of course, the liquidity cycle, which it seems to be sort of here or coming, that of course is sort of like like a North Star, like a compass, that's helping sort of like the direction. But it's really sort of, and we comparing like we really need the wind to push the boat forward, and the wind is really through all these, as we call it, market structure, and this is anything from, yes, ETF buying, it's the funding rate, positioning in the perpetual futures market, kind of all these like little ripples that we're seeing. And of course, that's kind of like important if we're seeing, for example, um, you know, um, fees or revenue spent on the Ethereum blockchain, if something is happening there. I mean, Ethereum seems to be also a little bit in a no man's land without any clear guidance where they're going. We're hearing a lot about, Solana, but we don't hear anything what's happening on Ethereum. And of course, a lot more stuff is built on Ethereum. So I think it's kind of like all these things. But also the market seems to be, quite technical. So it's really like short-term trading, how people, position themselves. But of course, there's also, a lot of on-chain data, which is crucially important. I was already saying earlier that in March we saw, huge transfers from whales onto exchanges. So they have been selling. That selling stopped, but we haven't really seen the typical signals from the on-chain that actually the market is starting to really pick up. Right now, we are literally kind of trading a little bit above neutral, a little bit below. And that's why it's very difficult to really make like a really firm conviction where we're going here. So I think ideally you want a trend, that a trend breaks out. I think we have never had this, I mean, we had like a 400% rally, and I think we could argue we had potentially a big cycle peak in March this year. But we haven't seen the crash. We haven't seen, anything really that is sort of like supporting the narrative that we're gonna ramp up. Of course, we are actually in a very, very favorable environment between October to March. That's usually a much, much better period to be long. I mean, we can look back, that's we topped out in March. Coincidentally, we have not done much, until September. I think there are some green shoot signs, but I think it's not clear when you look at the data, really, and it's really, we look at the data all the time. We don't make, wild announcements or wild views really without the data. And we have made big calls here and there, but I think right now it's just still very tricky because because yes, we're seeing inflows from the stable coins, from the ETFs, but we don't seeing the on-chain data that a lot of the money is flowing into Bitcoin or
Mhm.
into other, quality altcoins really.
Yeah. Can you just go into a little bit more detail on that? What is the on-chain data that you would see that would make you say, okay, this is looking really bullish?
So what we have is, of course, short-term holders. So everybody, that is, holding Bitcoin for 155 days or less. So normally when we see there a spike, so we're seeing a lot more money flowing into the market. So we haven't really seen that.
Mm.
And again, you know, activities really on the blockchain has quite down. So new wallets have quite down. Other things like fees on Ethereum have been like very low. The favorite example is, of course, fees peaked at 1.8 billion in November 2021 for Ethereum for that month, really, versus fees are sort of like 60 million right now. So that's, of course, a massive difference.
Mm.
Yes, of course, we had the EIP 4844 in March, then can upgrade. But since then, fees have actually also crushed lower. We had, 2, 3 weeks ago, we had fees kind of like ramping up. I think this has been probably associated with wrapped BTC on Ethereum that saw some interest and some demand, but fees have come back. And I think even this year, when you look into kind of like the May June period, where fees were suddenly crushing really from something like 400 million to just like 80, 90 million. I think that was a clear sign that maybe Ethereum is overvalued, and we came from like 3,700 to 2,300, 2,500. per ETH, and I think that is probably driven by less activity within the Ethereum ecosystem. And I think you need to sort of like use some sort of like valuation levels, see what's really happening when there's activity happening. And I think we don't see this right now. And we look at this all the time. Of course, we want to be bullish, but we also want to look at the facts. And I think this cycle is certainly different because again, we're having also this overhang from enforcement actions. Some of the traditional players that were working have really stepped back. We had, of course, Jump Crypto has sort of like stepped back from the market. There's a risk that other players and also might be stepping back now. We have, of course, market makers in Asia that are well known. Maybe they will step back. I mean, who knows how this is all going to play out? And they have helped in the past to bring really new users, institutions from USD into the crypto market. And if we don't have this, I think then it's going to be like very difficult for Bitcoin really to rally. And I think we are unfortunately a little bit in a no man's land. But one of the favorite indicators, and if there's really one indicator, and it sounds as simple as really calculating a moving average. So when we look at the 21-week moving average, and you look at this over 5, 6, 10 years, if we are above it, you're bullish, and if you're below it, you're bearish. I think you would have done really, really well in the crypto market because you would have sold, quite nicely in the previous bull market. You would have also, sold around like 61,000 where it is. So we are sort of like at this
Mm.
level, and I think we are sort of like fighting with this level. But if we go lower, I think the risk is that we maybe have like a deeper correction. But if we are above it, I think there's a way to kind of, try the bullish narrative. So that's why I think this is not really the time to make, big predictions as we have done in the past. This is really more about risk management and
Hmm.
having kind of like, these hypotheses and work with these hypotheses. George Soros became famous with having a bullish view and having a bearish view. So he always knew why the market would be trading in one direction. And he was able to change his view and be really ready to really press it. That's why I think just being bullish for the sake of it, as I was
Hmm.
saying, you can be bullish because of a 4-year cycle, but then also there's a 4-year cycle of diminishing returns. I think you can argue also this way that supposedly brought us or should have brought us to the 60,000 something, and we sort of got there, right? And this is some analysis we did in October 2022 based on, as I was saying earlier, we had like 560x during the first cycle, then 108x during the second cycle, and then basically one fifth of the return in the next cycle. And this would have brought us then to this cycle at around like, I think, 64,000. And this was our prediction that we get sort of like to this level, maybe plus some, overshoot to 70,000. This is why we have worked with a 70,000 as a target for this year. And we got there, quite quickly. But that's why it has become like so tricky. And that's why we were suggesting if we trade below the previous cycle's high at 68,330, it's about risk management. And then the next big risk management level is really the 21-week moving average. And when you really look at, the last 5, 10 years, you actually have done well looking at just as this indicator. And we're sort of like struggling right now with it. We went above it, we went below it. But if we are distancing us from this level, I think it's really about risk management.
Where are we now on the 21-week moving average?
We are just the 21-week moving average is just a little bit below 61,000, right? We are a little bit above 60,000.
Yeah.
So we are literally within a percent or two away from it. That's why it's very difficult right now to manage it. I think crypto will certainly not go away, right? We had, of course, in previous cycles, there was always the risk, right, that it would be completely made illegal, outlawed, or anything. But of course, you can argue with the Bitcoin futures that were approved by the CME in 2017, and then of course the ETFs based on the futures, and then of course now the spot Bitcoin spot been really approved, and with BlackRock and other issuers really legitimizing Bitcoin. I think it is here to stay. It's just a question of how do we navigate this cycle. I think there is
Hmm.
nobody is like massively bearish, but I think we are looking for a proper use case, maybe something has to be invented. I mean, we're certainly not giving up on it, but I think, we're going through this kind of like macro, micro, analysis right now, and I think we need to just have more clarity. And again, we can look at all the data. And I think this is a little bit like playing poker, where, if you have a good hand, yes, you can bet big, but if you have the hand is not so good, maybe you fold or maybe you wait. And I think we are sort of like
Hmm.
in this waiting period. And that's why, betting small is probably the right way, to go forward.
So we've got a pair with a straight draw. Is that where we're at? We're okay.
Yeah.
Like maybe don't fold, but don't maybe don't
Yeah.
raise. Okay. Cool. Marcus, that was I think a really good chat. Is there anything else that you feel like would be good to talk about in these uncertain times?
Well, we think like geopolitics is not playing, a big factor right now in the Bitcoin prices, right? I think there is an overemphasis on really kind of the macro data. I think the answer will probably be, either on on-chain data we've seen or on the microstructure, the market structure itself. That really kind of, signals, when to go forward. But maybe also the market needs kind of like the certainty from the election. I mean, the big surprise is really that when we look at, deribit outstanding options around the election, it's really actually not that huge, right? This should be actually
Mm,
like a huge event, and this is like less than 30 days. I think we are like something like 26 days away from it. But implied vol levels are still as if we are doing, trading during the summer when it's very quiet normally. So
mm.
not much is happening. People are really not positioning for any outcome. But I think that's also an opportunity, right? So maybe the right way to trade this is really to buy cheap upside calls into this event, into the year end, because it's probably the best way to manage your risk, right? So one way to manage your risk is, for example, to buy call spreads, right? So you buy, for example, no financial advice, of course, but you buy the 65K, you sell the 70K, and if you sell off from here, then the 70K strike will basically worth nothing. So you can buy this back and you have left the 65K. And if there's suddenly a big rally after the election, you can benefit. So this is a way to sort of like manage your risk a little bit around the election. But it's
Mm.
quite interesting that, with all this focus on the election, who's going to win, Trump is going to be bullish for crypto, that the option market is actually not implying much what's going to happen after the election.
Yeah, I maybe like I think despite like the chatter, it's hard for me to separate like my personal beliefs and insights from what other people believe. So first of all, I'll tell you that I think that Trump is going to lose the election. And I mean, I'm not a Trump supporter. I'm happy to be open about that, and I maybe that's a bias. But to me, I look at it as Joe Biden beat Trump in the last election very handily, and I believe that Kamala Harris. I mean, am I wrong? Did Joe Biden lose the election? I guess it depends on who you ask.
I think he was ahead by like 80,000 votes. That's
Yeah, I
it.
mean, I think, yeah, but that's a lot if you look at some of in any case, Biden won the election, and I think Kamala Harris is going to inherit the same coalition of voters that elected Joe Biden. And not to mention that I think Joe Biden, for most people, or the Biden presidency is a relatively popular presidency within the U.S. Of course, the people who are on the right, they have their complaints, and I think inflation, certainly is not helping. But relatively speaking, I think people are pretty okay with the way things are going right now. And in most situations like this, you see the reelection of the incumbent administration, which is what I think we're going to see here. I don't think Trump has the juice that he had when he first got elected. This is just my view as a American voter who's been following politics for a long time. But On the other side, I don't think people believe that Trump is really going to be as pro crypto as he purports to be. Um, and I also think people recognize that there is likely to be a different stance between a Harris presidency and a Biden presidency on the issue of crypto. For anyone that's been following this, there's been a lot of communication between the Harris team and the crypto lobby, and it's one of the first things that Harris started to do when it looked like the potential of her being the presidential candidate was there. So I'm not just, I don't think she's going to, pardon Ross Ulbricht on her first day in office, but it seems to me that there's a willingness to work with the crypto community, and, definitely possible to see some sensible crypto regulation and legislation in the next year, perhaps. So I I think what we're seeing in the market is a sort of ambivalence of the fact that no matter who gets elected, I don't think it's going to make that much of a difference. But I do think things will get better. I think from a political standpoint, we will be in a better position in a year from now than what we are in now, with a president that doesn't really understand the space at all, and kind of a administration, SEC and stuff below him that is, for whatever reason, intensely hostile to the space. I don't think that's what the space looks like a year from now, no matter who gets elected.
Could be. I mean, she has already, I think, selected the people that were, part of the dismantling of these three US banks in March last year into her team. So I don't know if there is this crypto friendliness really coming from her that that you were expecting. It might be really status quo and not much probably gets done or happens. But I think there is a lobby more coming from the asset managers. They want clarity around it, and maybe that's good enough, right? Maybe that's good enough that because the longer those ETFs trade, the more asset managers will feel comfortable, about it. I think we heard already that more and more pension funds in the US want to buy the Bitcoin ETF. And I think it's maybe just like, a slow grind, but I think it's a grind that is, supporting prices, right? And the more
Mm.
people get familiar with Bitcoin, the more they will look into other coins and tokens. And then, of course, that definitely helps the ecosystem, overall. So I think you can make, a bullish case that, it's kind of like an evolving theme, no matter who comes into the office in January. And historically, Bitcoin, it didn't really matter who became president. It didn't really matter which party became president. I think the interesting aspect is really when we have a new recession in the US, especially in the US. The interesting aspect is also if we have some sort of like a currency crisis or another economic crisis, what happens then to Bitcoin? Because I think then it will prove its worth and its value, maybe very
Mm.
similarly as we had during the March COVID crash, where suddenly people realized that stable coins matter or crypto itself matters. And I think that's sort of like where people have a little bit experience with Bitcoin, they might feel a lot more confident to put more money into Bitcoin when there is maybe like a currency crisis. And I think we cannot rule this out because those crises, they have come every couple of years or every couple of decades. And I think that's really when crypto serves maybe its purpose, because that's really when crypto became really big in China in 2013. It became really big in Europe during the European debt crisis. And I think maybe if we have another sovereign crisis, I think, and of course, if it's the US at one point, I think then crypto will become like really big as well because people are very
Yeah.
familiar with the whole on-ramp.
Yeah. Understood. Okay, Marcus, fantastic conversation. Thank you for everything. I will post a link to, you have a 10x community sign up or something I can share?
Yeah, please do.
Okay. I'll post the links to that. And I hope that we have you back on soon. Thanks so much for your time.
Thanks for having me.